Good morning, everyone. Well, the markets got clocked there for a few days. The precious metals were jumping, and now the markets are trying to stage some sort of bounce here as the two leaders with the massive egos play chicken with the planet. While it's true that these types of situations would qualify as crisis situations, and that they tend to be short-lived for the stock market. Short-lived is a relative statement. I'm sure you all know about Ned Davis and his exhaustive research he's done over the many years. I've read a couple of his works, and he did a study on the markets going back to 1900. In terms of all the major geopolitical crises that occurred since then. There were 51 such events by his study, and he found that the Dow Industrials recovered all of its losses and then some 6 months after the crisis. And I remember reading this in his book. I forget the name. This is years ago that he did an equivalent study, and the idea was that that don't let crisis situations or make you think that the whole sky's falling because the markets will recover. And certainly within generally 6 months or after the crisis occurred, markets would be higher and then continued higher from there. But in terms of market timing and stock selection, the finding's totally irrelevant because market drops during crisis situations can be severe. And the time frame also is way too long. I mean, you wouldn't want to be holding through a crisis situation because your stocks would naturally have triggered their sell stops within days, not weeks of the start of a correction. And what I noticed is that a lot of these research studies that are put out there are really quite counter to making money and keeping your profits in the stock market. And if you look at the most recent event now, that's, well, if we compare today's event to 1962, when we had the Cuban Missile Crisis standoff between Kennedy and Castro, and that brought the nation to the brink of nuclear war. And this crisis ran for a couple weeks, from October 16th to the 28th, and the S&P during that period fell almost 10% from peak to trough. So in today's market, a number of leading stocks would probably be off at least 20 to 30% or more in such a situation. Speaking of which, the FANG stocks right now are about roughly divided. We have Facebook, Netflix, and Apple that are holding up relatively okay.
I don't think Netflix is. I think if it rallies to the 20-day, it's a short.
Yeah, well, that's the whole thing, is that yesterday it's trying, and then you got Apple's whole, but it's all relative. So what these stocks are saying is that they're the leading stocks, but we also know that leaders can turn into short sale candidates. So on a percentage point basis, Facebook, Netflix, and Apple are doing better than many of the other names out there. I mean, obviously Google and Amazon, being the other two FANG stocks, are below their 50-day lines. But there are candidates like not just Facebook, but also a number of candidates that could come into short sale territory as they rally up into points of resistance. And Facebook would be an example of that right here, but Google and Amazon as well, and of course other names outside of this list. And we've got focus list names that came off. That was a clue. And that was leading up to the correction. And so your own stock should have hit their stops. You'd find yourself pushed into cash, or at least your exposure to the market would be significantly reduced on the long side. And you all know that that is a dynamic process that occurs in real time without having to predict the magnitude or the duration or the timing of a stock market correction. I mean, we always say, let your stocks tell you what to do, whether to get long or short or into cash. And then when the weight of the market comes off, the strongest stocks will often offer re-entry opportunities. And that was the point with any of these corrections this year. We've had such minor ones. I mean, they've been on the order of 3%. But nevertheless, you do have the Wyckoff undercut and rally formation that does present during such periods. And you can take more extreme examples. And as I mentioned in the 1962 one, when the weight of the market came off, you had that huge up day off the bottom, huge volume. I think it was the volume was what the most had been in months, and obviously some favorable news came in between in regards to the tension in the situation between the standoff between Kennedy and Castro. So
actually, wasn't that Khrushchev?
Well, it was Khrushchev versus.
There was Russian. There were Russian ships around heading to Cuba, and we were blockading Cuba. So it was more a standoff between the U.S. and the Soviet Union, and not the U.S. and Cuba.
No, I would agree. Well, territorially, geographically, it was U.S. versus Cuba, but in terms of leadership, it was Kennedy versus Khrushchev. And as I wrote, Kennedy was very, very mindful about giving Khrushchev an easy way out, a safe, face-saving way out of this situation, because he knew that the world leader had a big ego, and so and I think that's true with virtually all these world leaders, is that they sit in positions of power, and you have to give them a graceful exit, and that was discussed behind closed doors between both Kennedys, JFK and Bobby Kennedy. So I think that situation was handled with kid gloves, as it needed to be, and unfortunately Trump right now seems to be doing the exact opposite against this North Korean dictator that doesn't seem to really have any firm grasp of reality.
I would actually disagree with that, Dr. K, because if you go back and look at videos of Clinton or Bush dealing with Korea every time they got truculent, they use the same language, that if North Korea did anything, they would be annihilated or wiped off the face of the planet. So I think the tendency is that people don't like Trump. So if he says something like that, oh, he's a nut job. So it's this whole concept of having a view, an a priori view, and then looking for confirming evidence. So because if you go back, there's been a lot of truculent talk about North Korea, but little action. So, and I personally think that it's about time somebody stood up to Kim Jong-il or Un or whatever the hell his name is, and faced him down for the bully that he is. He's just a little tyrant. He's got a Napoleon complex. And I think the fact that we're at this point where they're on the verge of getting nuclear weapons just shows how ineffective the prior policies have been over the last 2 or 3 administrations. So I would disagree that Trump is nuts, and I would also disagree that this sell-off is necessarily entirely due to the North Korean news, and therefore it's somewhat comparable to the Cuban Missile Crisis, which I don't think is the case at all. I actually think that the selling could be due to a number of factors, and this North Korean news would then be used as an alibi. So in other words, the institutions need to distribute. And I think they actually started hitting, and pardon me for cutting in here, they started hitting the market in here and in here. So market will actually come under distribution as it rallies. And then, of course, you have this low volume rally where there's no volume, but they just push it up, and that's the whole QE BS. And now you're getting hit with more selling, and you're starting to come off. Now what happens is you get some news that North Korea isn't going to be so mean and or whatever, and the market might rally on that, and then institutions may sell into it again. That's a possibility, or we may continue selling off here. You can see today, objectively, what are the indexes doing? Well, they broke down for 3 days. That's a severe break, and now you're rallying back up towards the 50-day line, and the volume's not all that strong. So it's not an options expiration today, but no, it's too early. That's next week. So I think you may be under something more longer term. It may take some more time to unwind, but I think this whole North Korean thing is a reason for the market to sell off, and the only reason it's selling off. And of course, everybody gets up there and says, "Oh, it's a buying opportunity." I'm not entirely convinced, and I think you're starting to see some of the wheels come off in names like Nvidia, which gapped down. That was a shortable gap down this morning at the 50-day line. You're seeing Amazon breaking down, and it's basically trying to rally off these prior lows. I think it's probably going to head lower, and I wouldn't be surprised if the market rolls over, but we'll see.
I Okay,
So, you
well,
know,
yeah, I
that's how I
wanted.
look at the market. So, you know, I don't necessarily see it all within the context of this North Korean thing. I think there are other problems for the market that are starting to crop up that may be more meaningful. That's my main point. Anyways, go ahead.
Right. Well, first of all, I don't think Trump is nuts. I understand why he's. My point was that these are both leaders that are going head to head in a big way because of their personalities, and you can't deny that. You know, and also his advisors, I'm sure, are telling him, you know, what you said. You know, this guy is has a Napoleon complex, this Kim Jong-un, and he needs to be dealt with. My point is that this situation could escalate very quickly, and we could go into war. I wouldn't be surprised. I think the odds
Yeah, definitely. So I
are
think you're
fairly good that that could happen. Whereas Kennedy handled the situation differently. It was a different situation. And I do agree that I think the media has a witch hunt mentality against Trump. They're looking at anything and everything, whether it's true or not, to say against the man. I think he's, you know, a Davy versus a Goliath, you know, and I think that you know, he's trying to play this as smart as he can. So it's not a criticism per se. It is a prognostication of what's to come, and I do think the odds are greater right now than at any other time since the Cuban Missile Crisis, that the nation is potentially on the brink of some sort of nuclear-related war, since it seems to have been confirmed that North Korea has managed to put these small nuclear warheads in their missiles. So
Yeah,
it'll
right.
be
So Trump is having to deal with a problem that has festered over many decades and has been allowed to fester by prior administrations. So, and
right. No,
somebody's
I
saying that
agree that.
Somebody disagrees, saying that no, previous leaders have never used that kind of language. I think you're being pretty petty, Brad, actually, because you're just getting into semantics. He used fire and fury, but Clinton said that North Korea would be annihilated. What's the difference between being annihilated and dealing with fire and fury? You know, was he supposed to throw in bunny rabbits too? You know, I don't really understand any of that. But I think the bottom line here is that I think Trump needs to stand up to him, and North Korea has pushed the U.S. and a number of other countries, even Japan, right? Dr. K is now considering
Yes,
changing their constitution so they can militarize, correct?
they are already doing that
Yeah,
as of in a note I wrote
because
this
they're not
morning.
stupid, basically,
So
you know. But
they're
I
getting
think prior administrations have been stupid. If Obama was still president, he'd send North Korea $160 billion like he did Iran, and then hope that they're going to play nice. You know, it's a bunch of BS, and these politicians have gotten us into this position, along with the position of the country being $20 trillion in debt. In a couple of months, we're going to hit the debt ceiling, and that's something that nobody's really talking about. And you know, and the lack of progress on the Trump agenda, tax cuts, all that. There's so many other things on top of this that could make this a really nasty period for the market.
well, also the,
Yes.
you know,
No.
you were saying that the market's looking for an alibi, and I believe it's looked for that alibi for a long time to sell off. The sell-off is greatly due, and we haven't had any corrections of
First time
material
I've
matter.
ever seen anybody use Jesus. That's you're taking the Lord's name in vain, there, Brad. What's up? Oh,
Well,
funny.
I think that you know, the market needs to the air needs to be let out of this massive bubble, and it's going to look for a reason to do so. In the last time we had any meaningful correction was in January, February of 2016. So
Right.
that's like a year and 3/4 ago,
Right.
and you know, the market's corrected about 20%, but it still wasn't quite qualifying a bear market and
All
bounced
right.
the
All
market.
right. Let's get on with talking about some stocks. Which
I wanted to mention also, you just pointed out about the Ray Dalio. You know, he'd mentioned that one of the problems also, in addition to the North Korean situation, is a temporary government shutdown because they've got to raise the debt ceiling again. And you know, this is like a broken record. They keep doing it over and over again,
right.
and problems aren't going away. So I think that, you know, right now, the question will be, well, do we baby step higher again like we have this year? And I think that will be predicated on what happens between the U.S. and North Korea. But watch for potential, and we'll cover that today, stocks rallying into points of resistance, because they would be excellent short sale candidates. And you know, it wouldn't be surprising to see a deeper correction take hold, because it seems like the situation between the U.S. and North Korea is escalating very quickly, with Japan now on board.
Right. And so, you know, anyways, But let's just talk about some stocks. Most everything on the focus list has started to break down. So we saw ANET yesterday dropped below the intraday low of the BGU. It's trying to undercut and rally. So I guess if you're real bold, you could step in here and try buying the stock. So personally, I'm not really looking to buy anything, and definitely not over the weekend. In fact, probably I came in with cash today, and I've had an amazing week. Thanks to the UVXY, which had about let's see, the buy signal was Tuesday, and I think I instant messaged you on that, Dr. At 28.43. I was picking up on my 620 signal that day, so that would have been down here. And what's the move from 28.43 to 40? So that's like 35-40%. Anyways, that's very nice. And along with that, we've had a number of stocks blow apart. And I think, we talked about this last week, I believe, when Applied Opto blew apart, and that becomes a short sale target. Using the you guys, just by the way, I've got some shorts out that I put into this rally. We'll see. I'm not making any huge progress just yet, but we'll see if this starts to give way. I think you might come in over the close because I don't think anybody's going to want to be long stocks, and the rally seems a little bit tepid. But in any case, you saw the break here on Applied Opto, and it ran into resistance right at the 50-day line. That was a short right there if you're alert to that. So that's the sort of thing that I'm looking for. And I think with Applied Opto breaking down, I also hit Light the other day after earnings. They rallied up here, and I picked up a turn. Basically, it was a MACD stretch, I believe, and I shorted it just because I thought with Applied Opto reversing or breaking down severely after earnings. We also had OCLR, Claro, yeah, that one broke down after earnings. Finisar broke down after earnings. And notice a lot of these reversed. Juniper, I think, broke down after earnings. Yeah, Sienna, that's the big gap here after earnings. Sienna's anyway, so you got this whole group reversing on earnings. I saw Light up that day, Lumentum, and I tagged it up around 63, 64, and it's coming down. It's a cover down here because it's undercutting this low, so you're looking for some kind of a rally out of here. But I think if it rallied back up towards 60, I'd definitely be looking to short it. On top of that, you have the one I'm after right now, and I'm actually short this one as of today at the 50-day line, is Fabrinet, which is another one in the group. It's coming in a little bit. I think it was up a buck. Where did I hit it? It's like 42 and change, so now it's 41 and change, just above. So that's working. Somebody makes a comment. I think this is interesting. Once a month, May 17th, June 9th, July 27th, August 10th, I've gotten hammered and stopped out of a number of stocks in these sudden downdrafts, wiping out my portfolio. Monthly healthy gains. Is this just a fact of life in this market, or maybe I should shorten my time frame and take smaller profits sooner? Just venting. Well, my answer to that would be, have you been paying attention to any of our webinars? Because that's what we've been talking about for some time. This whole idea of selling into extended strength and taking your profits, and then looking to maybe buy back or at least having cash in your pocket so that you can work your way through these pullbacks, which often can present buying opportunities. So, but in any case, Fabrinet trying to hold the 200-day line, short at the 50-day. I guess you could short it here and use a 50-day line as a stop, but I think this whole group is in trouble. So also looking at group phenomenon here, you got Activision, Blizzard hanging along the 50-day line. I'm just kind of watching how this acts. Might decide to hit some of it. I don't know. The Take-Two is hanging up there pretty nicely. You had the Bible gap up last week, and it's holding up. And then what's the last one in the group? EA. It's trying to hold along the 20-day. But I'm watching all of these for a possible group failure if the market continues lower, because we could turn back to the upside. Right now, though, to me, this looks like a shortable rally. And they're probably going to goose it all day long and then let it go towards the end of the day. So I might go in real heavy short closer to the end of the day, depending on what I'm seeing, and then cover into the close. Even if I could do it in the last hour, I would do it, because you can get some pretty sharp movement to the downside. That happened yesterday, actually, because we broke for the lows. And it's only too classic that you would have a day like yesterday where you look very, very ugly. And of course, the market has a short memory these days, and it forgets what happened the prior day, and it just turns around and goes back up, and it's all happy again. And you got the pundits calling it a buying opportunity. But the market looks to me, I mean, Dr. K, if you look at this index chart, okay, let's go back to the old days before QE. Wouldn't you say this thing is under distribution? You got a lot of distribution days. It looks troublesome. Yes or no?
Yeah, that's pretty much textbook classic topping action
Yes.
based on price volume. And that the problem is that we've had these scenarios before over the last, since QE started. That's the trouble, is that it's thrown a lot of these patterns out of whack, because QE is we all know it creates a very shallow floor, or let's just say a floor that should have been much deeper than turned out to be. So that and QE, as we know, is at all-time record highs. These central banks, all they've done is jawboned about how they might need to start tapering in the future. But I believe that the U.S. central bank calls the shots, and the U.S. is going to make sure that these foreign central banks are going to continue to print, because if they ease too quickly, if they taper too quickly, then that spells trouble for the U.S. market, because it's the one that's received the most benefit out of this QE phenomenon since 2009. So, but that said, you got to, these tops take a long time to play out, and in the meantime, there will be opportunities, just like there have been all year, on the long and the short side. But we're not talking, on a level of many weeks. We're talking on the level of days. When you step your account up in that fashion, you can be, well, obviously there's some people up, fairly well this year, given this unusual tone of the market. And then to address that person's, the person who's venting, I understand a lot of people out there are a bit surprised that the markets have been trading this way, because you can't really find a pattern like this in the history of the S&P. At least going back to I haven't seen this replicated going back to 1957, when the S&P became the S&P 500.
Yeah, it's very goofy.
Yeah, so we don't have meaningful corrections, and we have baby step patterns, and we have one day dumps in the market where leading stocks get clocked. So and also volatility is at record lows. That does that. And I've explained this before, and everyone who's read it has seen. VIX volatility model is up over 50% earlier this year, but then this weird pattern started to come in, and its model is not what the models had to do is adjust to this environment, and the way it does that is it's modified a couple of the things as of in terms of its exit procedure, and also the UVXY is a formidable weapon of choice in terms of the 620 signal that it can present, and it's proven itself, certainly, and it's just a question of being able to get the right one and to keep your stops tight. So, and it's sometimes is something that happens very quickly. So, I've been playing with the timing of getting the note out to members, and then also knowing that it could just as easily reverse, which is why I experimented with the idea of having everyone put in a mental sell stop on the signal, on the UVXY signal, and that way, it's exactly your exit point, because that UVXY can blow by it very quickly. So you have to be on your guard, and you have to have your I would suggest a mental sell stop. So in other words, on your e-signal or whatever program you're using, it will just alert you with a window saying your alert's been hit, and you can quickly go and execute your trade. If y'all put in sell stops on the same price, then sometimes those things can get artificially triggered, as you know. So anyway, we look like we're going to come off further based on all this market evidence, but I think that's going to really be predicated on what materializes between the U.S. and North Korea.
Well, I think it could create a rally, but it would be a reaction rally. So what I would be watching for is the rally to fail. So all I know is the past few days have been very profitable on the short side. And even today, there's some things that are working. NVIDIA shorted, if shorted at the opening, it's down from there, and we'll see what happens there. But I think some of these others may be rallying up into shortable areas. I thought Tesla was possibly shortable this morning, and you can see that it's really not doing anything. You got a little bit of a stretch and cross on the MACD down here. You guys can see that. And so now it's just kind of trundling around. I'm actually shorted from much higher, and I come back after it in here on this push, on this cross up here when it's up around 359, 360, and then we'll see what happens from there. But some other names that may be shortable. Let's see. I think you got to look at all of these. I mean, Apple, that's a safety name, I think, but that could be shortable here. It could bust a 10-day line. You think to watch for here is you basically see a gap up through this base, so that's a breakout, and it's sort of wavering a bit. So if it breaks a 10-day line and the 20-day line, that would constitute a late-stage failed base. So that's something to watch out for. It would also tell you the market's probably screwed. So the ones I have been going after on the short side, Netflix, here's a situation. Now the undercut and rally setup has worked pretty well on the long side, okay, when the market sells off. But there have been a couple of times, I think there was that day that we were doing the webinar, Dr. K, and the NASDAQ just suddenly started selling off hard, and we saw it in the middle of the day. That was a day where you saw some undercut and rally moves that failed. And you can see here, 3 days ago, that would have been Wednesday, Netflix undercut the BGU low and then closed above it, just above it. But the next day it failed. And when I see that, I will come after the stock. Even if I'm long it, I'll flip out and go short. And the reason for that is, let's not forget that the undercut and rally originated on the short side. It was something I used to use as a short-term covering point for my short positions as they're coming down. And then when I began to notice in this market, the undercut of a prior low is actually turns into a Wyckoff spring, and you can then now use it in this environment as a buy signal, and it works, okay? So I'm going to be flexible on these based on what I'm seeing in the current market environment. And while I still consider it a cover point on the short side that could then be re-shorted into, I'm open to the fact that it could also be a buy signal and produce a pretty nice upside move that I can trade one way or another. So that all depends on how the market's rolling, and if the market pushes higher, then those will work as better buy signals. I mean, you can see here that's what happened back here with Netflix, and we saw that one in real time, I believe. If you go back to the webinar at that time, it undercut this low and then it turned higher, and that actually worked out because the market turned higher. So the thing is, okay, how do you play that? Well, you buy it there, and then if it starts to roll back, you flip out and go short, and I will do that without hesitation. So, you know, Netflix becomes a short yesterday and it breaks down, and you're getting a sort of, what's the volume rate on it today, Dr. K? What do you got here?
We got minus 20%.
Yeah, so it's rallying on light volume. Okay, so my thing is this whole rally is going to roll over. So I'm kind of sitting here. I got some shorts out small, and if I see this really start to roll into the close, I'm going to blast it and be very ready to bail out into the close and probably hold cash over the weekend. Of course, then the market will gap down 500 Dow points, and I'll be pissed, but whatever. I'm going to take what it gives me and be happy because I'm working on my 5th straight up year. And prior to this streak, I'd never had more than 2 straight up years. How does that work? It's called getting old and learning from your stupid mistakes. So my goal in this market is to be more consistent, not necessarily trying to hit it out of the park, but trying to hit a lot of singles and doubles. So, you know, I'm not going to be up 200, 300% with big positions in AAOI, but I might catch some of that and add a few percent to my performance, but I'm not going to go nutso to the upside performance-wise. But in this market, you can wake up one day and the market's gapping down on you. So there's a lot of risk I see compared to prior markets. So that's how that's achieved. And I think getting older as a trader, the key is consistency, to become more consistent. You know, when you're younger, especially during the 90s, we used to be madmen taking huge positions. The market would rocket. And if we got hit, it was the 90s. So things would come back and everything turns back to the upside. These days, that doesn't happen. And you get stuck holding the bag if you get tagged with a decent drawdown. So, you know, it's about being more consistent. Somebody says, Dr. K, since VIX futures are in backwardation, does it have any effect on the volatility model? I don't know. The UVXY went up on a 620 buy signal. That's all I knew. So.
Yeah, no, there's a number of variables that have different impacts, but in context with other situations. So, you know, when that one variable you're mentioning can have an influence.
Yeah, somebody says at present the volatility model is down. The VVM is down 40% as of since 1/1/16. So that's what the VVM has produced. But I think it's futile to try and model anything in this market. It's too screwed up. The only thing you can do is take a short-term view of the UVXY using the 620 signal and then trading it like a madman, because it's freaking crazy and the market's crazy and everything's crazy. So,
Well, yeah, I mean,
but in a
the whole
fun
thing
kind
is
of way.
the whole. Well, yeah. As long as you're making money, then it's fun. Or as long as you're learning, then it's also
Well,
fun.
that's because I don't use the VVM. I trade the UVXY using my own method and the 620 chart. I'm gonna have to do a video on it. Of course, as soon as I do a video on it, it won't work anymore. So.
Well, the thing is this: the VVM did over 50% early this year, and then it reversed it out, and because this market is very, very unusual and it's unfortunate, it's a one-off event, but nevertheless, it is what it is. So, as we always say, you got to adjust to different, difficult, challenging environments. But this has been a real behemoth for the BVM as a result of this type of situation. While the market direction model has continues to do well, it's flourishing. It's up around 50% over the last 12 months. The real issue here is that I'm seeing that the UVXY is a valid I've seen it's a valid use of going in on a 620. Now, if you looked at the 620 in prior years using the UVXY, it wouldn't. What would happen is you get too many false signals, and you wouldn't get these big one-day wonders where you can make a lot of money in in a matter of hours. But that's because
Tuesday. Here's Tuesday.
Markets were vastly different in 2000. Going from 2016 and prior to 2016, they didn't trade the way they have this year since really since about March, April. It's a very different environment. So all that's to say is as long as this environment continues, markets always change. They're never going to stay static, and this is a highly aberrant environment. So the VVM has adjusted to that situation. So I do expect it to start hitting some on both sides. Sitting on the XIV on the long side, but also managing to get some of these UVXY hits, which all you need is one to more than.
Well, look at the one we had. I mean, this is awesome on Tuesday. You had a buy signal, and then notice that it never. We can follow this, and it never. I mean, even going into yesterday, it tracked around a little bit, and you could have hung out and waited and waited. And then you got another stretch at the bottom and across, coinciding with another buy signal at 32, and then it ran up again. And then you could have taken a profit there, and then you got another stretch and across overnight, and the next day you're off and running again. I mean, you can trade this on a day trading basis, up and down, and when it moves very nicely. But I think like Jeff Gundlach said on Tuesday, buying the VIX at 28.43 on the UVXY was free money. And so far this week, it's turned out to be that way. Anyways, I want to get to more stocks.
But it's interesting that he said he didn't give a reason why, because North Korea news hadn't hit yet.
You didn't need it. You didn't need that, right? All you needed was to act on the signal.
Traded down that way a number of times. So I'm curious why he didn't, or maybe he did. What I noticed, a lot of these guys will take positions a number of times when the VIX is that low.
Right.
And it's been that low on a number of occasions.
That's what I do. I'm testing, because I think it's pointless to try and short the VIX when it's that low. Okay, it's like, yeah, okay, you can get all excited about being short the VIX and you're going to catch this little move, but I can buy, if the market's going up and this is happening to the VIX, I can just buy stocks and make a hell of a lot more money. So why do I need to mess with the VIX? What I want to capture on the VIX are these big upside moves that you get.
Right. Well, in this year,
so that's what I'm interested in capturing. So what you do is you come in and you buy the cross, and you give yourself a tight stop. If it breaks below my low, and I may give it a dime or 20 cents, I'm gone, and then I may come back and do it the next day. So you do have to be persistent, and then you can day trade. But you're just following the 620 signal and moving with it. It's not that hard.
This year,
and I think it's a stupid trade. I mean, it's a fool's trade to be trying to short the VIX on a longer term basis when you're this low and the VIX is near all-time lows and the market's up near highs. I think the better trade on a time value basis is to look to go long the VIX, even though you may have to come in and take a few shots and be pushed out very quickly. So that's been my approach, and it's very successful so far. And I don't often sit too far. I'm not in it right now. This got sold into and a little lower than where it is now, but still, that I'm not going to complain about that profit because
right. Keep in mind that the VIX was basically near all-time lows early this year, and that sitting on the XIV is what got it its 52% return. And then it basically,
but
that
it
article
evaporated instantly. So
that's because the market
about a 52% return, but it's down 40% since the first of last year. So I don't really understand. If I want to cherry pick a period where it does really well, that's great. But I would rather be more active in the VIX than trying to take a longer term view, especially in this environment. That's just the way I approach it, and it works. So I mean, you can't argue with results. And you can't fudge your results and pretend that something made a bunch of money or is making a bunch of money when it's not really. I mean, a system proves out by the money it produces, not the performance it produces in a short period of time.
So there are obviously learning curves, and this year I wasn't able to predict. I don't think anyone was that this market would do what it's done. So to see that big gain reverse was definitely an eye-opening experience to see, and to then make the adjustments. But nevertheless, the adjustments are in place. But we'll see how long this market can continue at doing what it's doing. I think the UVXY is still valid because until QE starts to really diminish in any material way, I think that this kind of pattern is going to repeat. It would be nice to see something like a North Korean situation actually let some of the air out and stage meaningful.
It may. That's what I'm saying. You could get a sharp reaction rally on that, and then you see whether institutions sell into that as a form of alibied selling. And if any of you who are new, and there are a number of you who are, the whole alibied selling thing is something Bill O'Neill told me that institutions do when they need to get out of the market, because they can't sell everything in a day. They need several days to at least several weeks, sometimes longer. And so what they'll do is, if there's some big news event, they use that as an alibi to sell. So they just sell a buttload of stock and knock the market down. And then the news, the alibi, turns out to not be such a big deal, and the market jacks back to the upside. And that gives them another chance to distribute stock further into that rally. So you watch how they play out. And eventually, I think you do get a distributive breakdown in the market. I don't know when that happens, but I think we're getting close. Like I said last week, I think we're getting close to a correction sometime soon in the next month or two, and we got it sooner than that. So thank you, North Korea. But we'll see what happens on that. But anyways, other names to look at on the group thing, short. Now I think watch the rally into the 50-day line. This is a late-stage failed base, okay? Workday, they come out with earnings soon, though, so I'm not sure you want to do anything there. But again, they're in a similar position. Salesforce, same situation. You can see these things are just like the market. They're rallying back up into their 50-day moving averages. Looks just like the NASDAQ. So everything's mimicking the indexes. So it's all the same thing. You might even, if you think we're going to roll over from the 50-day line, you could buy the SKUs, which is the Ultra Pro short. That's interesting. It ran into the 50-day line, so itself. But anyways, so that could also push higher. I don't know. Right now, what's the MDM on cash, right?
Yeah, everything's right now on cash.
Yeah, right now so we'll see. Anyways, where's Ronald Reagan when you need him? Actually, Ronald Reagan, I think there's a little bit of mythology about Ronald Reagan, because basically what he did is triple the national debt while he was president. So he got us started on these huge deficits. So when I look at the country being $20 trillion in debt, Ronald Reagan had a big hand in that. So I don't necessarily know if his policies would be working today, where we triple the national debt again, because that would take us to 60 trillion. So I'm not so sure I'd like to have Ronald Reagan as president. So
there was fuel in the tank back then, because interest rates were double digits, so he had a lot of fuel to play with in terms of getting these programs afoot. Right. Whereas today,
deficit spending was off the charts at the time. That was off the charts, running $180 billion deficits. I remember that was crazy, and it struck me as basically using a large credit card to make yourself look wealthy. I guess that's just what it looked like. Anyways, I still want to get through some of these. So you can see all these names. Watch this group. They've all broken the 50-day line. Now, CRM, Workday, what's the other one? Data, I think. I don't know. Data's more like a Splunk. That's actually acting okay, and it's hanging in there. So I don't know. Maybe you want to keep an eye on that one. Let's see. Yeah, that's right. Reagan also sent a cruise missile into Gaddafi's palace. That freaking nut job. Okay. Seems like VERT would also be a good plan. Volatility. I am not long. What's VERT? VIRT?
No,
Virtue
VER.
Financial. Okay. I don't really know anything about it. Let's see. So the market, they're pushing the market further to the upside. It looks beautiful. I'm going to get long because that's the bottom. It's over with, right? Blah, 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 blah. Let's see. What about, let's look at some names that were on the focus list. Square, back up into the, I don't know, that's looking like at the very least it needs to build a base, a long base, a very, very long base, I think. It's had a great run, though, since we first put it on way down back here. Baozun is, whoops. What happened here? That's hanging in there. Don't they come out with earnings like any day now?
I think it's, yeah, this week.
Okay, so watch that one. BABA comes out next week, and that's. You notice how it's undercutting the prior low, so that might set up as an undercut and rally buy if you wanted to test that out. All you would do is blow out if it breaks back below this low, which is 149.10. So you're about $1.50 above that. And I think we'll see what the market does. I think you're going to pull off into the close, but I don't know if it's necessarily going to be a disaster. I think a lot of money is probably peeled out, de-risking, I suppose, following the escalation of words between North Korea and the U.S. Have you noticed that the NASDAQ has broken the uptrend line from December 2016? Let's take a look at that. I don't really see it. This uptrend line? It looks like, I don't know, I wouldn't make too big of a deal of that. You could have said it broke the uptrend line here, or that it broke the uptrend line here. I don't know. I'm not really going to make a call on the market one way or another based on that. I mean, I'm not into macro bull or bear calls. I don't think that that gets you anywhere. You have to look at what's going on with the stocks, and I would just focus on that. So Nutanix, look at that guy's moving. He's trying to retake. Now it's a different type of undercut and rally. Last week we had it undercut this low and try to rally back above, and now it's rallying back above this low. So now you got another UNR setup here, and the low here is 2080. So I don't, go long, I guess, young man, and see if it works. Let us know how you do. What other ones look interesting here? JD is an old name. That's been hanging up there. It's trying to hold at the 20-day line. Here's Yext. I knew that once we took it off the list, it was going to go up. I think it went up because of the Yelp and Grub news. So Yelp is up there. I wouldn't buy it up there. It probably was buy. These probably you need to hang out and watch the or see the 10-day moving average catch up to them. So I wouldn't be jumping all over them here. 3 waves down on NTNX. Where? If you're looking on the daily, it's not something you look at on the daily. It's something you look at on the weekly. And really, all you would say on the weekly is it's more of a longer term thing. You got one wave, 2 waves. Why is my? And there's no third wave. So again, you're proving my point that a little knowledge is a dangerous thing. I think what you're seeing is you think you see 3 waves like this, but I wouldn't really pay attention to that. All you need to pay attention to is the very concrete long setup that you see in your face right now using the 2075 low as a stop, and you're at 2141. So I mean, that's not too far down there, but that's all you need to know. So But it's funny, you know, people get these concepts, you tell people about these certain concepts like 3 ways down, and then they want to apply it to everything. But it's mostly a longer term sort of washing out of sellers and creating just creating a situation where sellers are all washed out and the stock's sold out. So that's on a longer term basis. So I wouldn't really look at it as a short term thing. So, and you don't need to, because it's much more concrete using the undercut and rally system or buy point or whatever you want to call it. Let's see, market's up 48. Okay, real nice. Looks wonderful. Nothing's really moving around. This FN is still down. 41.28 on the bid. Let's see. Any questions about stocks? Nobody has any questions about stocks. Weibo? How about that? I mean, look at these. These are crazy moves. On after announcing earnings, it broke down along with Cena, which is a majority holder of Weibo stock, and they're just all over the place. And then now they're just kind of flopping around. So how do you play this? Do you buy them at the lows and then hope for the best? I guess you could do that. That would work. But I don't know. We'll see. But no questions on stocks, huh? Interesting. AYX. Well, that's not happening. It's just very choppy. So you know what do you want me to tell you? You should have bought it at the 50-day line. So how about an intelligent question? Something meaningful, something deep. I'm searching for deep meaning in my life. I mean, what is that? Okay, yes, buy it now after it's 10% off the 50-day line. How about APPN? Appian. That was a nice move on that undercut and rally. I was a little even a little surprised, and it worked. You know, you had the undercut and rally through this low on this day, and it hung tight at the opening, and then boom, it launches. Of course, it goes to new highs and it comes in. Now you're kind of flopping around the 20-day line. I don't know. It really depends on what happens from here. So
also, some of these names, like you all might remember Enyov. We got that one twice early on. When was it? I think it was last year. Yeah, it had a couple pocket pivots.
Yeah, it was. It actually was a voodoo name, I think, that I talked about on the voodoo report, because what I was seeing is the pullback, undercutting this low. What the heck? Keeps giving me a thin line. Undercutting this low and the volume drying up on voodoo, and that's kind of what I like to buy more than, you know, now something's sticking up. I'm not going to buy that. I like this off the 50 line. You can see that the 50-day line actually showed up right there on that day. Very interesting. Let's see. Could we look at 620 on CC?
One-day gains like an Enyov, just like this APPN, you got to take your profits rather than get greedy, because if you have if you get a gain in a day of 8-10%, that's really good, and you should be taking at least partial profits.
Yeah, I mean, that's a great move if you catch it, but you got to catch them at the move. Okay, could we look at 620 on CC? Went short at the 20 DMA, covered at the high, but was there a tell that wasn't going to work? Well, if you're shorting it, okay, you have a MACD stretch and cross here. Okay, so I mean, and that occurs right up here, so that's around 46. You're at 46.22. So if I'm shorting it, I'd probably be shorted around 46. You're down 22 cents. If you're in there, that would be the spot to come after it. Anything, there was never a confirming 620 sell signal where you need to see the lines cross. So, there's no tell. I mean, everybody's always looking for certainty when there is none. All you know is you got a MACD stretch and cross here. You'd short it at 46 and see what happens. Set your stop based on how much money you're willing to lose and go from there. It's like that's the one thing that people don't really seem to get through their thick heads, is that ultimately a stop is based on the primary concern of or consideration of just how much money are you willing to lose on a position. I generally operate, and I think we're sending out a piece on this. It relates to short selling, but in stops in general, I as a general rule, I don't want a stock once it comes down to create more than a 1 to 2% loss in my portfolio. If it starts getting above 1% loss to my portfolio, now I'm thinking about just cutting it back And if it's 2%, it's gone, okay? And I can use that as a method of stopping myself out of position. So everything is based on how much you're willing to lose. But, you know, the idea, though, I guess you're looking for some idea that there was something telling you it was going to go higher. Well, you know, the couple of things work against fair. The market keeps going higher, and it's continuing to rally. If you look at the NASDAQ composite, it's still trading near the highs and pushing up ever closer to the 50-day moving average. And maybe it's ready to blow chunks, I don't know. But there's no real tell there. You take your shots and, you know, you set your stops. It's that simple. No, everybody wants certainty. How do you tell? How do you know what was a sign? Please critique my trade. I like that when we get an email and somebody wants us to critique their trade. We don't do that, people. We'll do it on the webinars if you've got something you want to talk about, like you just did on CC. But you don't email us with requests to evaluate your trades or your portfolio. We don't give personal investment advice, and we're not allowed to. And even if we were, I still wouldn't waste my time doing it because there's nothing in it for me. And paying us $60 a month doesn't qualify you for personal investment advice. Anyways, sorry, I was going off there. Any other names? I mean, Paul Altoner's another one I'm looking at as a short. You see, it's rallying. There's a group thing going here, but it's rallying up to the 200-day line. It needs to get there. Let's see. And if you look at the group, Fortinet, that's a piece of garbage. Off the 200-day line, maybe it needs to rally. So some of these stocks could rally. I can see that happening. What else? FireEye, another piece of garbage. Was trying to look good and it reversed. That was a short up there at the 50-day line last week. And what are some other? Oh, CyberArk. Now, let's see, NASDAQ's up 38, NDX up 44. So we know what's driving it today. It's a big bounce in the NASDAQ 100 stocks. No, you didn't miss anything on that, Chris, on that CC example. I mean, a lot of times you're not missing anything, okay? It's just stopping you out or it's not working. You know, that happens. Sometimes trades don't work. It's true. Sometimes an undercut and rally doesn't keep rallying. Sometimes it actually turns into what it was when I first began to observe it, a rally you can short into. So, you know, there is no certainty. I think we talked about in the second book. It's like people search, they want certainty. Always want certainty. You know, there is no certainty. The only way to make money in the market is to first become comfortable with uncertainty and then have ways of dealing with it, concrete methods to deal with it. It's really not that hard.
Yeah, basically, if you want certainty, don't trade. Or as Ed Seykota said, if you don't want to risk your money, then don't trade. If you don't want risk in your trades, then don't trade at all. No such thing.
Yeah, I'm watching AOI. It's not really getting any juice here. The FN, which I'm short, it's just kind of flopping around in here. I don't know. This could work. The Tesla also. Let's look at this on a 620. I think, I mean, it could just be pulling in and consolidating, so I don't know. I've got a little bit out here. Maybe I'll just cover. Well, I probably will cover everything by the close. I'm just sort of testing the waters here, seeing if we break back to the downside. Because nothing has been resolved yet with the North Korean situation. Maybe it will before the close, and we'll get a blistering rally to the upside. But Tesla, to me, you know, this pattern, this looks vulnerable. Straight down, straight back up. It's not really a cup. It's more like a weird ascending base, or I'm sorry, ascending neckline type of head and shoulders. You can see that here. That's what it looks like to me. And these guys burned through $1 billion of cash. I saw numbers that were 1.2 billion. Someone said just a little less than $1 billion, but they're burning through cash at a rapid rate, and they're trying to borrow $1.5 billion. And Musk was babbling about he has interest for a third of it so far. Well, it's been a week, okay? And in previous debt offerings, they've been able to get suckers to pay up. Would you loan money to Tesla right now, Dr. K? Would you loan them $1.5 billion, being confident that they're going to pay your money back anytime soon?
Well, first of all, I'm not a government.
There you go. What if you were an investor?
That presupposes that I'm as inefficient and ridiculous in my thinking as possible.
Yeah, somebody says $1.4 billion cash burn in second quarter. So, okay, so the way I'm looking at this right now, and we did put it out as a short yesterday, and I think it still is. You're near the top, so you got this area of congestion. So I'm watching this a couple days ago. I actually went short it at like 369, something like that. And I'm working it every day. It seems to bounce up every day and give me a chance to get back in. I'm thinking it's going to test the 50-day at least. That's like 348 something. But you see this area of congestion in here, and that's where I'm starting to look for a turn on the 620 near 370. And when I get it, I'll short it. That doesn't mean it's going to work. It could keep going to new highs, right? Just to burn your ass, as Sir Larry said in the movie Wall Street. But this is where you would look for a rollover, and of course, what's going to seal the deal is a break through these moving averages, the 50-day first, and then you got the little ones after that. So just keep an eye out for that. I think it's definitely a possibility. Let's see. Any other questions before we wrap it up? Because I need to get back to trading, because I'm going to blast this thing if it starts to roll. We'll see. How many of you are still 100% or more invested? I'm just curious. Raise your hands. Nobody. Wow, that's good. How many of you are more than 50% cash? I'm raising my hand. Does short count as being cash? I guess so. Me, hand raise. Yeah, so you guys are smart. So you know what to do. You see the signals, and maybe you've been able to offset some of your lost profits in stocks you're long that are pulling back by getting into the UVXY. If you follow me on Twitter, I usually tweet out the signals when I'm getting them. And the way you work it is, like I said, you give yourself a 10, 20 cent stop and then look to get back in. Or you could see a failure on the MACD stretch and cross. That's another quick way. So it's sort of a staccato method in the sense that you'll come in, take a position. If it doesn't work, you'll back out. If it starts to work again, you'll come back. So you take a bunch of little teeny tiny little losses, hopefully less than 1%, and then you catch the big move to the upside and have an orgasm. So that's the whole idea. But you guys can follow me on Twitter. Anyways, 100% cash. Look at that. There's a lot. That's smart. A lot of you. I mean, the writing's on the wall, so it's not like someone necessarily ringing a bell. Some of these stocks have already probably forced people out to begin with. Anyways, let's see. Dow's up 45, NDX up 42. They're pressing that. What's the Russell doing? The Russell is actually down, isn't it? Yeah, we're down 0.11% there. The NYSE Composite is up 0.02, so pretty minimal. The leader here is the NASDAQ. So, of course, they're pumping the NASDAQ names today, but you're still not getting past the 50-day line. You can see that. Now, you look at the S&P. One of the things that struck me, and that was a cautionary sign to me earlier in the week and last week, was this rally in the Dow. So now you've gone from 100 NASDAQ 100 stocks leading the market to 30 Dow stocks. And as the Dow is doing that, the NASDAQ itself is flopping around, and the S&P is flopping around and going nowhere. So all of a sudden, the leadership role is being taken on by 30 Dow stocks. Now, if that's not narrow, I don't know what is. Is there a smaller index out there, like of 10 stocks? Maybe the VoSI Focus List Index would be one. That's 8 stocks, and probably going to be a lot less after this weekend. But that was a warning sign to me. And it's interesting that you get these warning signs. You get the buy signal in the UVXY on Tuesday. And I knew it was going to be a good day for the UVXY when I saw Jeff Gundlach get up there on CNBC and say that buying the VIX here is free money. And he was right on that, I guess. Of course, he's also been calling for a market top for a long time. But the 620 signal worked pretty well that day. And so, my basic message is we got some shorts I'm looking at where I have a group thing, like in the cloud names, CRM now, Workday, or the opticals, FN, Light, AAOI. You could even look at OCLR, FNSR, Sienna, and any others, even ANET, which is another one in that space. You might watch this up here, because if it fails on this undercut and rally, then it's a short, and you could come after it there. So something to keep an eye on. And then what's the other group? The other group I'm keeping on that's been a leading group is the gamers, ATVI, Activision, Blizzard, Electronic Arts, and Take-Two. Although Take-Two is hanging in there pretty nicely on that Bible gap. But notice how it's not going anywhere. It's a little bit like Netflix again. It has these Bible gap ups after earnings, and it goes nowhere. So you got one over here, you got one here, Maybe that was on some news, maybe. No, that was earnings. This was on news. And then this last one, and it goes nowhere. It just poops out. So anyways. So raise your hand if you found anything useful about this webinar today. Yes, there's one. Oh, there it goes. Wow, that's awesome. 27 of you all of a sudden. Boom, boom, boom. Okay, well, that's good. Well, my general message is look at the short sale targets I'm talking about. I think where you have group situations, that's probably your stronger areas, or you just be in cash and, don't worry, be happy. If you are looking at the long side, watch for the undercut and rally setups, but be quick, be nimble. Jack be quick, Jack be nimble, Jack bail out of the undercut and rally when it drops below the prior low, okay? And that's a quick way out. I mean, that's the whole point of the undercut and rally setup, is that you can keep risk to a minimum because you're using the prior low, which hopefully by the time you buy the stock coming up through that low is not more than 1 or 2% past it. So you're going to keep your risk by definition very low, and that's how you want to do it in this market right here, right now. Because I think it's crazy and dangerous, and I think also on the short side, So tread carefully, stay nimble. All right. Anything else, Dr. K?
No, I think we got to. This is a very. We're in the middle of a volatile environment, so you got to be very, very quick about your positioning.
Be ready to do the
find that this tension. There's no signs that this tension is going away anytime soon, and it's like I said at the beginning of the broadcast. I think it's likely to elevate. So we'll start to see that materialize in the price volume action of the markets, should it do so.
Yeah.
So that might make for some quick profit opportunities on a time value basis.
Sounds good to me. All right, you guys have a great weekend. We'll catch you next week. Take care.
So long, everyone.